and my colleague, George Imade, who's also a director with Alpha Morgan, he will give our vote of thanks at the end of the program. We're going to jump straight into it because over time we've realized that we need more than 1 hour. So we're going to jump right into it. And I encourage our participants to kindly type your questions in the Q&A box, and we'll get to as many questions as we can take after Bismarck is done with his presentation. And I want to take this opportunity to remind our participants, please remember to open your account with Alpha Morgan Bank and help us to expand our relationship beyond this webinar. You're welcome once again, and let's get started. Over to you, Bismarck.
Okay, good morning, and thank you for having me this morning. It's been a hectic week as far as economic policy is concerned, both globally, regionally, and domestically, even locally. Can you hear me clearly?
Yes, we can.
All right. All right, we are using a new device for voice. Alpha Morgan. Once again, congratulations, Alpha Morgan, for being a comprehensive financial supermarket, from a bank to a wealth management company and all other things attached to it. This morning, the discussion is going to go in 5 distinct contents. One, let's give us a minute to share our slides. Sure. Actually. Thank you. Can you see the slides now?
Yes, yes, okay, we can see the slides, yes.
All right, so we're going to go through 5 distinct units, and in all segments, we're going to spend not more than 5 to 7 minutes. What we said last time, we had a meeting exactly 2 months ago. 2 months ago in Nigeria looks like eternity. Then we're looking at Nigerian economy as it is today. What it was yesterday and what it is this morning is totally different. Then we look at what we call a synthetic portfolio. Since we are having investors here, we're going to be asking yourself, okay, if you had invested in this kind of portfolio, A, B, C, D, E, let me say, for example, you had CBEX, you had Wonder Bank, you had this, you had that, and you had some Bitcoin, and to some extent, you had some stocks, what you would have lost, what you would have gained, and the opportunity cost of investing wrongly. Then we look at what is the Nigerian economy going to look like. There'll be 3 meetings. One, there'll be some releases. 1, inflation. 2, Q2 GDP. And then MPC meeting, September. And then by Independence Day, October 1, we will know what the economy will look like towards the end of the year. It looks as if we just said Happy New Year a few days ago, and now we are in the second half and going towards the end of the year. Again, like we all say, we make all these New Year resolutions only to break them 24 hours after. So we will finalize with risks and conclusion, because it's a different world, right? Now, let me see. Okay, what we said last time, and the slides are there for you to see. This was on 21st of May. We said the Naira would depreciate further, trading between 1650 and 1680 in June. No, the Naira lost initially, but then appreciated again. Today, it's trading at 1528. For the first time in over 11 or 12 years, we've seen the Naira in the parallel market appreciate more than in the official market. In other words, the gap between the official and parallel is now negative. In other words, people are buying dollars from malams and selling to the central bank. Inflation is expected to decelerate further in May. Yes, it did. It went from 22.97 to 22.22, but new methodology, and we'll have to interrogate that. The Nigerian stock market was projected to be mixed. No, the Nigerian stock market actually appreciated in the month of June. Then the average primary and secondary market T-bills remain high in double digits. It did remain high, but the rates came down, the yields came down. Average opening position of domestic money banks will remain in positive. Well, that's not a that in reality it's been positive, but whether it was going to be longer or shorter, but we'll come back to the reason why, because FAC actually increased to about 1.8 trillion. Therefore, our money supply growth is reflecting that. We expect impressive Q2 corporate earnings as the Naira stabilizes. Well, Q2 earnings are not out yet. We'll see. We are going to be seeing some very soon, and we expect that the profits reported by corporates for Q2, which ended in June 30, will be higher than that which happened in previous quarter. So where's the Nigerian economy today? Basically, we look at a couple of factors. One, real GDP up at 3.13 for the first quarter. Oil production 1.5 million barrels. It was about 1.3 million barrels in the previous quarter. Gross external reserves today is $40.1 billion according to the central bank governor yesterday. So please ignore this figure you have there. The trade balance is $3.4 billion. The purchasing managers index, there are two purchasing managers index, one from central bank, the other one from IBTC. We tend to want to believe that of the IBTC, but the governor of central bank made a clear statement yesterday that the PMI is not a statement by the central bank. It is data that they collect and is based on the data they have. It's not a central bank position. So to think that the PMI is expanding, therefore and GDP is expanding means that the central bank believes that no, he walked back from it yesterday. Oil price is at $68 a barrel, I think. Today is about 69. And but I want you to take into consideration one thing, that is the dollar has lost 10% or 11% of its value since the beginning of the year. Therefore, $68 now. If you have price of oil at $68, effective price is actually $62. Because that's the effective value of the dollar in commodity price terms. The exchange rate, okay, it's correct here. It's 1.528, which is, like I said earlier, if after a very long period, the Naira exchange rate is in the parallel market, the Naira has appreciated much more than in the official market. Now, is this an effective price? If you call your malam to buy dollars, depending on how dumb they think you are, they would tell you 1540, 1560. But the moment you know that they know that you are aware, they'll quickly tell you 1528. Then they'll ask you whether you're buying or selling. But generally speaking, the currency is more aligned with its official value at this point in time. Portfolio investment flows, that is PFIs, for June, $2.65 billion, clearly, because they're buying Nigerian risk-free instruments, and those risk-free instruments are giving them a yield based on, and the exchange rate, the international investors are taking advantage of that. The policy rate remains at 27.5% per annum, and headline inflation is at 22.2%. That is headline inflation year on year. The one-year treasury bills are 16.30%, and average opening position on the banks in July is showing a short position here. Okay, so what are the variables we're looking at from an investor perspective? Very important is inflation. And you can see the line on the left is month-on-month inflation, while the blue histograms are annual inflation. So you find that month-on-month inflation is actually increasing, and for you to do a good comparison, you would have to annualize the month-on-month inflation and compare it with the annual headline inflation. That way you'll be comparing oranges and oranges. So as far as we're concerned, the annualized inflation, month-on-month inflation, is way higher than the 22.2, which is the annual inflation. One point to note is that the annual inflation here on headline inflation is comparing the prices in the basket last year with what it is this year, while the monthly inflation is comparing last month to this month. So the monthly inflation is more current are more relevant to inflation. The other thing we have to note is that core inflation, which is inflation less seasonalities and energy, also increased to 22.76. Still within the same range, but core inflation shows that structural factors restricting output are there, while the monthly inflation and headline inflation reflects more on the composite basket altogether. Now, the exchange rate stability, you can see from here clearly that since the market reunification in last year, you've seen that the difference between the parallel and the official has kind of narrowed to zero. And so we've had prolonged period of stability, as the slide here will show you, which means that, there are people who are saying that, is this the time for me to sell my equities to buy Forex and invest in Forex? By this time last year, I have a few clients who bought currency at about, not this time, earlier, but at 1,850. Today they are crying because if they had waited and say 15 or 14% per annum and bought it today, they would have gained about 300 naira on every dollar. So at times, doing the wrong thing at the right time or doing the right thing at the wrong time gives you the same outcome. So what are we seeing? We're seeing stability in the exchange rate. Why? Because there's three things have happened. One, the Nigerian banks have allowed you to use your Naira cards overseas. Diaspora inflows because of the new BVN for diaspora. Then we raised money in the diaspora bond, which we are using those dollars to support the currency as well. So to a large extent, you can expect to see that the currency is going to be stable within this period, except something dramatic happens in the oil market. But in these days of what we call external uncertainty and domestic vulnerability, you cannot be too sure. So you got to diversify and spread your portfolio across asset classes so that you don't get hit, because anything is possible. So why this is the truth? The US dollar index has dropped, and the Naira, the way to look at it is that the Naira against the pound has actually weakened. The Naira against the euro has lost about 4%, while the Naira against the dollar has gained 8.4% this year, and in the last 2 months has gained about 6.6%. The central bank had a meeting yesterday, and cautious, but the central bank didn't want to start flip-flopping. They've had 10 meetings in the last 2 years since Cardoso came into office. They've hiked 6 times, cumulatively 8.75% per annum. They've maintained status quo 3 times, and they've not reduced. So that way, what has happened is that while the rest of the world, we've seen most rates have declined, we have remained constant. So against the rest of the world, the Naira, the central bank, the interest rates have remained stronger. Are we having positive real rates of return? Depends on how you look at it. We still think that we need another 2 months to test the methodology of the new inflation data. But going by what we saw in the GDP, we think the data integrity is becoming paramount. And also, I understand that on Monday, they will be releasing a new unemployment data that's coming out. The unemployment data is something that every time it has been announced, people yawned because nobody believed it. So we would take the unemployment data with a pinch of salt, because if you take South Africa, where the income per head is $5,000, and they have 32% unemployment, and Nigeria, where the income per head is $1,000, and we have 4% unemployment, it tells you something. But having said that, when you look at the new GDP numbers we talked about, talks more about ICT, entertainment, portfolio flows, pension activities, which was not captured in the last GDP numbers. It shows you a different picture. So, and the informal economy is now supposedly about 42% of total activity. So there are so many moving parts, and therefore we should take interest rates, exchange rate, inflation, and money supply, we should always test it with the counterfactual or with the anecdotal evidence. So Nigeria and its peers, you can see here that the US has held 9 times and cut 3 times in the last year or so. The United Kingdom 9 times and cut 4 times and raised interest rates. The United States raised 4 times and all that. So it tells you Nigeria, no cut, 3 times held and 6 times raised. So Nigeria is not going with the flow, but it's looking at its own peculiar circumstances. And that is very important. Like the central bank governor said yesterday, he said 3 things. One, that 8 of the banks have complied with the minimum capital requirements. He said that the forbearance thing is an interim factor. He also said that an airline told, a travel agent told a customer that I would rather, that before when he sends an invoice, the guy used to pay me in dollars. Say, please do not pay me in dollars. I would prefer you to pay me in naira. So that is indicative of where people expect the currency to be. At this time, 2-3 years ago, backlog of funds, airlines are being owed this, that, and the other. Today, they are not only competing. If you look at the difference between a Turkish airline business class ticket from Lagos to London, even though you are changing planes in Istanbul, it's about one, the importance of information asymmetry. 2, the importance of having knowing, not having to stop in between flights. And also it tells you that because of lack of sophistication in the market, some airlines and some carriers are able to exploit others. But at the same time, Air Peace is offering 1 million naira return to London. Okay, so what has the MPC decision got to do with, and how does it affect you? One, we expect the equities. My view is that since the equity market expected a cut and they didn't get a cut, my view is that probably in the next today and tomorrow and day after, we'll see that the Nigerian Stock Exchange will actually lose some value because we saw turnover. And some people, because they see the currency moving this way, will sell the liquid equities to go and buy foreign exchange based on their old philosophy that the naira will always weaken against the US dollar. Some will buy pounds. Nigerian Treasury bill auctions, we think that the central bank, not the central bank, the DMO would actually lower rates to some extent, but marginally. For the bonds, there will be capital gains on the bonds. Bitcoin is not in our control because the US president and the US government are very interested in Bitcoin, not just Bitcoin, sorry, but cryptocurrency. We will see some movement. But now they're saying that crypto traders must have US dollar backed assets to actually support their issues. So that's another issue altogether. We don't like to recommend things that we don't understand. Warren Buffett, who is the most successful investor of all times, the Oracle of Omaha, says Bitcoin is like rat poison and he's not going to buy it. Real estate, very interesting market. Real estate is a hedge against inflation. And if inflation is beginning to decline, then naturally you should expect real estate values to begin to decline. Because the only reason why I buy real estate at times is to hedge against inflation. The other reason is for money laundering purposes. And now, with all sorts of things happening, people are now beginning to wonder. So, what's the history of rebasing? The last time we rebased was in 2014. Yes, and now we are using 2019 as a base year. So, it was $187 billion. That was the last, what the IMF estimates of our GDP was. Now it's $250 billion. So GDP has increased over the 10-year period by 33%. 33.7%. So if you divide that by 10, you get what your probably average growth in GDP is. But what is more important is the real GDP growth rate for the first quarter, which is 3.1%. Is that a great number? It's not a bad number. It's higher than the population growth rate. It's definitely much lower than the inflation rate. And definitely it captures more activities. But you have to break that down and see what sectors are growing, what sectors are what we call cyclical, which go with the economy, those that are defensive, which actually improve when the economy actually declines, and those who are just ahead of time. So the informal sector is now bigger than the formal sector, and that can be understood. Because if you look at the workforce in Nigeria is supposed to be about 75 million people. The number of people that are registered in the pension scheme are about 7 to 8 million. So only about 10% of the workforce are in the formal economy, and the other 90%, so to speak, are in the formal economy. What does informal economy mean? You can see that clearly, right? But now, because of technology and the fact that everywhere you go, you have to submit your TIN, your tax this and tax that, there is a gradual formalization of the total economy, one. Two, there's also financialization of the economy. Before, every market woman, after making enough profit, the two things they do, they send their children abroad, and two, they build a house. Now, those market women are now participating in collective investor schemes, looking at returns. So, okay, if I trade, I get X%. If I build a house, I get X% on rent return. If I am more aggressive and speculative, I invest in CBEX, I get 30% a month, and then money disappears. and if I do a job and we all come together, and one of them goes to Dubai to buy gold and comes back, possibly they bring genuine gold, probably they have fake gold, but price of gold has actually gone to over 3,500 per ounce. So now Nigeria is the 40th largest economy in the world. The goal before was to be among the top 20, to be number 1 in Africa. So in Africa, we have dropped to number 4, but in sub-Saharan Africa, we are 2. In the world, we thought we'll be at 20. When we were tracking this thing many years ago, Nigeria was 27, now we are 40. So like they said in Kramer versus Kramer, Nigeria is working its way down the ladder of success. So now look at this, and this tells you the bigger an economy, the more likely that the economies of scale, the more integrated the economy is, and then you decide to invest. So on the left side, you see the Nigerian market capitalization of the stock market is $54 billion. Fiscal deficit as a percentage of GDP is 4.7%. That tells you, indicates the kind of fiscal discipline, right? Then we have power output. We still, 30 years later, we are still producing 5,000 megawatts. So the average power output per head of Nigerians is 180 kilowatts, which can barely, you need about 60 kilowatts to light a bulb. So if every Nigerian averagely put on one bulb, and we may not be able to charge our phones, but at least we'll be able to see with the bulb. Then we go to the right side. We are unemployment. First of all, the right side is $5,000 per head, 5,700. The average output per head, and South Africa say they have an energy crisis. They're doing load shedding. Do you know what they have? 2,986 kilowatts per head, compared to Nigeria, which is 180. Now, fiscal deficit as a percentage of GDP is 4.6, and market capitalization in this $500 billion economy is 1.16 trillion. Our market cap is 54. It's about 1/7 our GDP. So, but yesterday, Aliko Dangote said it's going to list the refinery. It's going to list some other companies. So, with NNPC listing, this listing, we might easily see ourselves at about maybe $500 million of market cap very soon. Therefore, everybody in this audience will have an opportunity to either invest in a much more vibrant market, a much more efficient market as the economy begins to scale. Now, banks' exposure to sectors that are very important. The banking sector exposure, trade, 18%. And trading is very important. Every Nigerian is a trader, wholesale, retail, or just selling handbags in the offices. Crop production, 17.5%. That's very important. We grow maize, we grow yams, we grow cassava, and that's very important. Real estate, 13.3%, right? And the exposure of the banks to this sector is 13.3%. So the banks' exposure to trade, which includes importing petroleum products and all of that, is about 18.2%, right? And then we have, okay, so let me get it right. The bank exposure to trade is actually 7.9%, while the bank exposure to crop production is only 4.5%, and real estate is only 3.39%. You can understand that because if you lend money to real estate, let's take an example. If you build a house with 500 million naira today, right? And you borrowed money at 20% cheap money, you would need 20% of 500 million naira to pay your interest alone, right? But if you put that 500 million naira in a treasury bill, you get 16%. You are getting much more than the rent you can get. And the chances are that the tenant may default, right? So if it defaults, then you spend money getting the police to evict the person, going to court and renovate your house. So that's why you're not seeing a lot of people investing. So the main investors in real estate are developers, 1, 2, money laundering people, and 3, people who are speculating. Telcos, bank exposure to telcos is 3.15%, but the contribution of telco is 8.5%, which is very important. And then construction also 2.5%. So generally speaking, the bank's investments there's a positive correlation between the sectors that are growing and high contribution to GDP and bank exposure. Well, synthetic portfolio, assuming that you invested 100 million naira sometime 1 year ago. If you invested in gold, you sold it now, you would have got a 40% return. You would have, if you spent 100 million naira last time in July last year, but if you bought gold in July last year, whatever price it was that time, you would now be worth 140 million naira. So compare that if you went to start building a house. Real estate, if you invested in real estate, even though, and that's positive, last year you bought into a real estate investment trust, you would have got a 22% return. Your 100 million naira would have got you 122 million naira. If you NVIDIA, which is a very risky and artificial intelligence chip manufacturer, bought NVIDIA last year, by now, assuming the exchange rate remains the same, you would have had 47% return. Your 100 million naira would have gotten you 147 million naira. If you bought dollar equities, you would have gotten about 500,000 naira. Your 100 million naira plus 500,000, because the market has gone in all directions. If you bought Nigerian treasury bills, you would have got 120 million, 120.6. So depends on when you enter the market. I think the S&P is at a record territory, so I don't see it. It's not 0.5%, so we'll correct that. No, that's cash. No. But we're talking about the US dollar equity investment, okay? Now, so asset classes. So if you had a 1-year return, for example, if you bought MTN last year, I think the price was 154, about 154. Now it's 400. So your 100 million naira would have given you'll be worth now 204 million naira if you bought MTN stock last year. But nobody knew that this will change. I mean, some we speculated. Some had it and didn't sell. Some bought, and some actually sold. For those who sold, they have more tears than fears right now. And those who bought are laughing all the way to the bank and are buying more, right? And taking some money off the table so that at least they can do things. So tariff hike has a, right? The fixed income, if you bought fixed income security collective investor scheme, you would have made 21%. So your 100 million naira would have given you 121 million naira. So, right? If you bought Okomo oil is even doing much better than MTN. Okomo oil, if you bought Okomo oil, your 100 million naira, you'd be worth 380 million naira today. And what you should do in that case, so sell and take some money off the table immediately and keep it. You know, it's better to cry with money in your pocket than to cry with money outside your pocket. If you bought an federal government bond, you would have got 150 million naira. If you bought Apple, which is part of the Magnificent Seven and all of that, you would have lost. Your 100 million naira will give you only 94 million naira now. You lost, but nobody knew that there'll be tariffs. There'll be tariff wars between the United States and China and India. So never write off Apple anyway, but that's where we are. So this is what you are looking at. Hindsight, it says 2020 vision. We are saying if you bought MTN last year with 100 million naira, you would have been worth 204 million naira. You'd be a very happy man. If you put your money in collective investor schemes, approved ones, your 100 million naira will give you 21 million naira, which is roughly 1.4 million naira a month. You can pay for the groceries with that. Okomo oil, if you bought 100 million naira, you'll be worth 318 million naira now. You'll be a very, very happy man. And if you bought federal government bonds, you that made 15 million naira on your 100 million naira, not so bad. And if you bought Apple, you have more tears than you thought. So this is what you see with the Bitcoins and Ethereum and all that. We don't try to cover that. So tactical allocation, quoted equities today, 40%, treasury bill, short-term, so percentage of your portfolio, quoted equities 30, minimum with 15%, treasury bill short-term 20%, treasury bill long-term 15%. Those are bonds, so to speak. And federal government bonds also 10%, and corporate bonds 10%. This would be an ideal portfolio where you're not likely to lose, but you're not likely to make money like a bandit. Okay, now, so what do we expect for the next quarter? Because we are meeting again. Equities, we expect maybe a 2% rise, mainly speculative. But why is it happening? In the 2023, 2024, people lost money because of Forex losses. Those companies are not going to have Forex losses this time. So instead of Forex losses, they might make some Forex gains because they've domesticated their debt. And so, but the banks who had Forex gains will be reporting probably Forex losses. But again, the banks have shored up their capital. They've met some of the forbearance requirements, and therefore the banks are a pretty safe place to be. Real estate depends on the market. Real estate is all about location, location, location. So what is location? Location is driven by a couple of things: traffic, security, infrastructure in the estate. As a young analyst in this country, I was always told, when you're looking for a house, always look for a house in the rainy season. Don't never go and pay for your tenant to look for a house in the dry season, because if you pay your rent 2 years in advance in February, in somewhere in the Yano or somewhere, then in July, when the first rains come, apart from the roof being blown off, the gutters and the drains. So we advise people, please buy and look for properties during the rainy season. Then you know the bottom of it. And also, if you buy in the rainy season, the landlord is not going to say, my son is coming back from England, therefore, so. Now, also people are buying the developers, and we are seeing interlocking blocks, concrete roads, and all of that. Two, we find out location. Most of the fringe neighborhoods in the Lagos metropolis are in Band A right now, because if you're in wherever it is, Shongotedo and all those places, they are in Band A because they have power 22 hours. While the closer you get to downtown, the less your power stability, and the more likely that you would have to deal with solar, 1, 2 generators, and 3 diesel. Invest in money market funds. We like money market funds because you can come in and come out very quickly, and you can cross. US equities, we like US equities because as the dollar is falling in value, the US equities should be appreciating in value because people are buying more. It becomes cheaper and attractive for international investors to buy into that market. So, is the dollar going to get stronger? Well, there's all sorts of conspiracy theories, but the dollar is the preeminent currency. It is 75% of trades in the world are done in US dollar, and 57% to 60% of all external reserves are held in dollars. And the current phenomenon of uncertainty in the US will end as we go into the next electoral cycle. Well, now this is just the Nigerian stock market, and we're not going to. The outlook, we have already said, is that look for those sectors that are growing, look for those sectors that scale. That is, sectors, you don't buy sectors, you buy companies. But even though you have sectors, within those sectors, you have dominant players who dominate those businesses. So if you have a very strong company, say telecoms, you have this, you have MTN being a dominant player. For example, in the last 24 hours, Airtel has faced a major disruption, and so leading to all sorts of problems. And it is a problem because I don't know what happened, but everybody, including my line, was disconnected, claiming that NIN verification or something. But there we are. Couldn't make calls, couldn't receive calls. My banks were calling me to confirm checks. They couldn't confirm. So it was very disruptive. Now, that's because we're running time. We have sectors. There's downstream oil and gas. This sector is a sector that will rediscover itself. Why? Because last time people bought tank farms, did everything. And once there's a major shakeout in an industry, you find consolidation. So what do we expect to see? We expect to see Dangote refineries become much stronger price leader. Many people who bought modular refineries are now beginning to see that this is a scale, it's a high volume, low margin business. And yesterday we had a conference on regional pricing, and we found out, Dangote made a speech, very important, very powerful speech, that the specification of petrol in Cameroon is different from the specification of petrol in Togo, different in Ghana. Therefore, they refine for those markets. Now, what happens? The smugglers buy and take all sorts of canoes and carry it there, but you cannot sell. You can only sell those things in the fringe. So that market is going to there'll be a hub for refining in Africa, and which will be in the Lagos Dangote hub. There's going to be pipeline and storage revival, and so the downstream sector is something that will look, and it's going to be quoted. Telco, you can't go wrong with telcos, in spite of all the madness of what happened in Airtel yesterday. We're using them right now. So they've invested in infrastructure. So telco infrastructure is different from telco services, and telco services is different from fintech activities. So we are going to be seeing that, and the switching capacity, you have the e-transact and all the other e-transact and interswitch and others. So if you look, all you have to do is look at the number of volume and value of transactions that are happening in the business. the POS terminals, the OPAs, the CUDA, and all of those. So there's a major change in the retail and the financial services business and the payment infrastructure. There's a payment system, payment and settlement system, and then there's the switch infrastructure, and then there's a settlement infrastructure. You can imagine how many people suffered yesterday because one carrier had a glitch. Now, power. We go back to what we said. You cannot have an economy that is growing. I'm sorry, let me stop and I'll take you back. Nigeria wants to be a $1 trillion economy by 2030. Nigerian economy is now $250 billion. To get there, in 2030, we need to grow at about 15 or 17% a year. We are 3%. Then, even if Jesus Christ comes back, we are not going to go from 3 to 15% in 1 year. So I believe in miracles, but not that kind of miracle. We have to work hard. One way to drive that is power. So you can't have people with 158 kilowatts of power a day per head competing with countries where they have so many thousand kilowatts per head. So there has to be a revolution in power. And so solar, renewable energy, hydropower, and it's more than just making announcements. It is actually doing what we have to do. Okay, but things are changing and things can change rapidly. A power revolution, including forbearance of power sector deals, and we think that can happen. So I would like to invest in power companies after the restructuring. Agriculture, again, there's crop, there's aquaculture, there's primary produce, you can see what's happening to oil palm. The same thing is going to happen to rubber, going to happen to cotton. So cashew, soya bean, and all, there's so much to be done here. 1, production, 2, storage, and 3, processing, and then exports. So you take the value chain and then the commodity exchanges where people now store these commodities big time. I think we will see major developments in the agriculture and select. When I say agriculture, just don't buy into things. You have to select the commodity and the company. So Okomo, what's the other one? Fresco and others are doing very well. And there are more. As a matter of fact, Wilma PZ has sold that business to another. So you have then cocoa production and cocoa processing. Cocoa is about $8,000, $7,900 a ton. Probably come down to $5,000. But remember, it used to be less than $2,000 a ton. There's money to be made there. And generally speaking, people in Osun or Ondo State are laughing all the way to the bank. They have been laughing for the past 2 years. Real estate markets that are interesting: Lagos, Metropolis, Abuja. I think Kano is beginning to revive again. And Port Harcourt used to be an interesting market, but now it's a political tinderbox. So we think that urbanization and right of way, we're real right of way. We are beginning to see some interesting developments in Abeokuta and other places. Okay. So sector opportunities, said Airtel, MTN, Airtel, we have to take right now because it's not every day they have a glitch, but when they have a glitch, it can be very, to put it mildly, could be very disruptive. Dangote refinery to increase production to 700,000, but it's not listed yet, but we think that interesting things there. Okomo, we talked about. Carverton, well, we'll look at that and expect some things to happen. No. So this is the whole idea of the impact of a Dangote refinery being listed and the company being a major hub for West Africa. So the Naira for oil deal helps. The equal, what we call uniform pricing across Nigeria, and then possibly the pipelines and things will follow. Now, so $1 trillion economy, we have to look at power, oil and gas, agriculture, telco. The banking system, like I said, it sounds safe, and we are going to be seeing, we're going to be seeing some interesting developments. One, GT has raised money overseas, so Nigerian banks are going to be divided into those who are international players and those who are domestic players. But the problem with international banking is that you are assuming political risk as well as business and market risk. And political risk in African countries is a bit difficult. The average age of African leaders, when they looked at it recently, was about 70 to 75. And the average age of African societies is about almost 20 to 23. So when you have a big disconnect between the ages of those who are leading the country and the ages of those who are being governed, then that's the potential. Those societies are prone to crisis. But again, you have in the US, the president is 80 or whatever it is, and the median age is about 40 or 45, 50. So that's not so bad, but the difference in the age structure, and again, biological age and mental age are two different things. So you can be, the biological age of the Nigerian median age is 20, but their mental age could be maybe much lower than that. So before independence, this is what's going to happen. We think that real GDP growth will come up a bit stronger. Stock market capitalization will kick in. I don't think there'll be new listings between now and Independence Day, but we'll have some earnings and some results will come out. We think we are beginning to see signs of that. Inflation will moderate marginally, and gross external reserves will be about $40. $40 billion. So how do we conclude this? There are some risks. To think that everything is honky-donkey and everybody is going to be happy and will be licking champagne glasses is to be very naive. There is political risk in Nigeria. Opposition coalition, whether they can agree amongst themselves as to what vehicle and who to lead, is to think that what happened in 2015 will happen again. We don't know. But in Nigeria, if you have to look very carefully at it. They say it's easier to put 50 flies in a matchbox than to get 10 Nigerian politicians to agree on anything. So we'll see. But the only thing that is common to everybody is the fear of happy statistics and unhappy people. Also, Nigerians do not like authoritarianism. So that is another thing. The current administration will have to, first of all, ensure that the economy works for everybody, and two, that there should be less of an autocratic leaning. So we do not expect any major political disruption in the next 2-3 months. There'll be NEC meetings, 1, 2, 3 things, but we'll see coalition talks and people hobnobbing. We never know what will happen. In politics, 24 hours is eternity. Policy risk. If inflation does not continue its downward trend, well, the major policy risk is the price of oil drops. Because we're in a world where we don't know what's going to happen in Israel, we don't know what's going to happen in Gaza, we don't know what's going to happen in Iran, we don't know what's going to happen. So all of a sudden, we could see oil price drop to 55. If that happens, then all policies that we're talking about, there's no, all bets are off. So let's keep our eyes on what's happening to the global oil price. And because if it drops below a particular level, then Nigeria will begin to play defense, right? It's not about people, it's not about politics, it's about the uncertainty. So I could say currency risk, policy risk and currency risk are tied together because the currency is a product of policies. So you'll find that if oil prices were to drop sharply, there will be the supplementary budget, which means that you have to cut back on your expenditure, and also it will exacerbate the political risk. Business risk, I don't think I look at a few companies, and I sit on the board of a flour milling company. So the results I saw yesterday showed me that we are doing better in 2025 than we're doing in 2023, when the dollar exchange rate was 700, and now buying dollars at average of 1550 to 1600. Turnover is higher, EBITDA is higher, right? Profits are higher, and dividends are higher. So we look at this environment. So business risk is actually, there's an inverse relationship between business risk and open market. We are going from a closed economy to an open economy. In conclusion, ladies and gentlemen, inflation will decelerate and expect it to continue that way. And this will bring about a reduction in interest rates, policy rate first. And people, as interest rates decline naturally, you should see an increase in equity values. As interest rates decline, we should see an increase in property values, right? And investors will be looking for balanced and diversified portfolios rather than throwing everything into one pot. We need to be cautious, and we need to look at there is wealth management and wealth creation. Those who make investment their day job are those who create wealth from investing. Those who are above 40, 45 are managing their wealth and growing it gradually. Those below 25 probably have nothing to invest, but will invest. They create an investment culture. So everybody has a chance to do something different. But again, remember, you always buy on the rumor and sell on the news, right? The exchange will remain stable. The exchange rate will remain stable. And between now and Independence Day, we hope, but don't count on it. Trying to predict the exchange rate market is like trying to catch a falling knife. So we won't do that. So all things being equal, Dangote refinery will bring down the price of petrol. We are hearing that it could go down to as low as 700 naira or 750 naira in another 2 months. That will change the picture completely, to wreak havoc for a lot of downstream players, but it also mean that the people will benefit from it, and that transport fares may begin to actually reduce, because again, transporters in Nigeria, the cost of replacing those vehicles, from what I hear, Uber costs have actually increased by as much as almost 30–40%, in spite of the fact that the petrol price has come down more for the maintenance of those vehicles. The price of tires have increased, price of batteries have increased, price of fan belts have increased, price of your roadworthiness has increased, price of the license has increased. And again, thank you very much, ladies and gentlemen, for this opportunity. Thank you, Alpha Morgan.
Thank you, sir. Thank you so much. The interesting thing about your presentation is that as you're making this delivery, like they're like wheels turning in one's head, because they're just trying to make sense of so many things and connect the dots to so many things. And with some of the questions that I have here, it's all about sustainability, right? So somebody had a question about the capital market. I know you had mentioned in your presentation something about a number of companies not facing the revaluation, FX revaluation challenge that they had previously. That is not going to play again. And so you see that in their profitability as well as other things. However, what else is driving performance on the equity market, seen as core inflation is still a bit on the high side? And is it sustainable? Is this rally sustainable? There was a report that said the market gained 396 billion naira yesterday, So is it sustainable?
No,
Yeah.
Part of that is speculative. Let me be clear. You see, the stock market is a stock price is the present value of future earnings. You've got to go back in the last 3–4 years. what did it take to succeed as a company? You had to know somebody in the central bank to give you preferential allocation. You had to know somebody here and know somebody there and all of that. Now, is that over? No, it's over in terms of you don't need anybody, right? Foreign exchange is now available to anybody who can buy it, right? Two, because the exchange rate has been stable, as a matter of fact, appreciated from 1950 or something all the way to 1500, you see that the cost of bringing in raw materials has dropped. The amount of inventory you carry, that is normally some people carry in their warehouses, they carry about almost, how would I put it? They carry about 3 to 4 months inventory. Now, because I can get the forex when I want it, and the cost of borrowing locally is high, I am carrying lower inventory. So one, the preferential treatment by people who go and buy forex through the also whatever windows, the availability of intervention money from BOI and others. Three, the amount of inventory I'm carrying. And four is that market efficiency. The middleman, who is a parasite of society, just buys and sells and makes all sorts of things. So what we are seeing is a gradual shift of an highly imperfect market, imperfect economy, moving gradually towards a perfect and competitive economy. Competition brings about efficiency. Efficiency leads to higher profitability, and higher profitability leads to growth. Now, also those who cannot compete, who are just hanging in there, and there are many corporate parasites in this society. Those ones will die, and quite frankly, it's better unto him who has, more shall be given. Unto him who has none, even the little he has, should be taken away. So,
Okay. Now, on that note, on the issue of the appreciation in the dollar, just as we, sorry, in the naira against the dollar, there's another question around it. You've explained the reasons around the stronger naira, and it's almost like we're holding our breaths and hoping that it sustains. But you had said, you had mentioned the potential for, should there be, you don't know what's going to happen next in the world between Syria, Israel, US, Ukraine, Russia, all of these things. What is the projection for sustainability of the improved naira against the dollar?
okay, let me try to explain and go back to economics 101 or international finance 101. You see, there's an exchange rate, which is the value between an external currency and domestic currency. That's a price. But what you want to find out is that market, first of all, let's go back and say, if there's a shock today, what the purpose of having a shock is that you have buffers, right? A very fat man, if all of a sudden the temperatures drop sharply and there's snow, a fat man can walk through than a slim person who has no weight, right? So the buffers you have, the reserves we have, the foreign exchange reserves, and the other, the debt profile and all of that will help us. So if the shock does not last more than, say, 2 months, the currency will not be affected badly. But secondly, we have to go back to whether a currency is misaligned or aligned, right? If a currency is misaligned, you go back to the purchasing power parity value of that. The purchasing power parity value of the naira today is about, at best, maybe 1,200 naira, right? While it's trading at 1,500. Chances that over a 3 to 4 year period, currency will move towards its PPP value, right? If there are no shocks. I said it before that the things outside our control are more than things within our control. That's why you need buffers. That's why banks have reserves. So if you have reserves and you have to write off loans, you have to make provisions, you have to have impairments, they take it against the reserves, right? It may not affect your normal income. So all of these things put together tells you that the Nigerian naira is trading is undervalued compared to its PPP value. The Nigerian market is now open. and the fears that you will not get dollars when you need it are reduced. Therefore, the likelihood of a violent devaluation of the currency like we had last year or the year before is not very, very unlikely. So the volatility index of the Nigerian naira is at best 5 or 10%. What is 10% of 1,500? That's 150 naira, right? Okay, so let us add 150 naira to 1,500. What do you get?
650.
1,700, right? Is the world going to come to an end if the naira goes to 1,700? No. So we want you to understand that there's the currency value, there's fear, right? And then there's speculators' activity. So right now, nobody's running around going to buy PTA. You know, before, oh, do you know a bank MD? I want to buy, what do you call it, personal travel allowance to buy. Nobody talks about it. The Malam will bring the money to come and meet you. There you are. Nobody's going to chase them around and all that. Before, they were looking for Malams in the shrubs in Abuja, saying that those are the people that are causing currency. All those are over. Now the true market is people are bringing their money in. International diaspora people are bringing their money into the country. And so once there's an open market, then and transparent market, things will be stable. And this is not new. 5-10 years ago, in fact, 5 years ago, maybe 8 years ago, we're using our Naira cards overseas. There was and nobody's made anything, and the Naira was stable all that time. So we are back to that situation. People can use their Naira cards overseas now. People can do whatever it is, and the currency. So currency stability should be a given. It shouldn't be a fear anymore.
All right, thank you. I'm going to tie two questions together here. I know you had already touched on it in terms of focusing on companies within sectors that are, defensive, that are doing well within the sector. But there are two people are really particular about this equities market. One person is wondering whether this market prices are not overpriced, and Fisayo also wants to know whether we should be concerned about a similar 2008 bust, considering whether the fundamentals of these companies are right.
Okay. There's one Fisayo there, there's another one here. Right? So we have one Fisayo here who actually looks at these things. Now, the reality is that 2008, they say in Israel, they say the best place to hide when there's an air raid is
the bunker
where a bomb has fallen, because the probability that a bomb will fall in the same place twice.
Oh, okay.
About 1,000 times less that the bomb will fall in the same place 2 times. So anytime there's an air raid, people run into a bomb where a bomb fell before. That something happened in 2008 means, and that it will happen again, is the probability is almost zilch, right? It won't happen. So, and that's just law of probability, right? But the reality is that the circumstances that led to the 2008 crisis, what they call the subprime mortgage crisis that led to the fall of Lehman Brothers, which led to the election of the first Black president of the United States and all sorts of things. Those things are one in a century events. It won't happen again, right? But how do you value a company? You value a company based on earnings multiple, its positioning, its dynamic thought process that goes into whatever we're doing. You guys are in the banking system, you know that 10 years ago, the biggest thing to do is to have a bank, have a branch, and collect cash. You have your vans collecting money to the vaults and all of that. That has changed. Today is a different ballgame. So the critical success factors in any industry, any sector, change from time to time. And it's always the mindset of the managers, the mindset of the leaders in that industry will determine whether it will succeed. It was Magnificent Seven 2 years ago and last year. Now tariffs have come and all of that. It's no longer Magnificent Seven. So it was Zuckerberg and Jeff Bezos and right, Amazon, and Tim Cook of Apple. Now it's Nvidia, and it's a different world. It's Huawei, it's 5G, there's now AI, ChatGPT and all. So we are beginning to see different factors that drive success. It was Tesla, it was electric vehicles. So for us in Nigeria, what I look at, the size of the market, the dominance of the player, the effectiveness of the leadership of the company in that sector, and whether they are vulnerable to swings, right? So if a Nigerian bank has branches in 6 or 7 West African countries, and 4 of those countries are overtaken by coups, Mali, Niger, Burkina Faso, what happens to all the money coming from there? They've deployed significant resources there. Then something happened in Cameroon. The 92-year-old president is contesting again for another 7-year term. We don't know what's going to happen, how effective and how strong and it's going to be when he's 95, 97. Fine. We've seen that in Malaysia. The 100-year-old guy came back and did a better job than the previous man. We don't know what's going to happen in Cameroon. We do not know what's going to happen in DRC. We do not know what's happening, what's going to happen. Ethiopia is a big market. So these Nigerian banks that are opening branches out there, do they have the capacity to understand sovereign political risks? And what do they do if some things move all of a sudden, right? So I'm not sure that we have the capacity. Why would Standard Chartered and others be selling and moving out of the market and you are running into that market? So we have to ask ourselves questions as to, do we have the capacity, or is this our time, right? There's always a time in the affairs of man, right? So I can't sit down here and speculate. All I can tell you is that some of those shares depend, if the average price any multiple of that market is 30 or 40, and then all of a sudden you are seeing some price any multiple of a particular sector or company is much higher, I'll be very wary, because I'm buying, you buy into weakness and sell into strength. I don't buy into strength and sell into weakness. So we have to be very cautious about what are the fundamentals of that sector, that industry, and what is the position of this company. So if MTN has 40% of total active subscribers and they're investing in 5G, investing in this, can we do without voice? Can we do without data? Can we do without streaming and all that? I don't think so. And now so the towers are there. The price of diesel has come down from 1,900 to 1,050. So everything, you don't need to be a soothsayer to know that, or clairvoyant to know that that sector is going to make money. And if that sector is making money, the leader in it is going to make more money. You don't need to be clairvoyant to know that the refinery, the Dangote refinery, is going to dominate. And right, so those are what we call no-brainers. But at the same time, we never know. But that's the attitude, that if these companies are going to make much more money, and these companies are going to have market penetration, which is deeper than originally thought, then I don't think you can lose by buying into this company. And the other where there's governance. MTN is not going to take your share capital and go and use it to buy lace or something, right? They would invest only in the business which they know best.
So it boils down to individual research and conviction.
Absolutely.
Yeah. Okay. So Emmanuel wants to know, his main concern is that the major driver of inflation is food inflation, fueled by rising insecurity in the food basket of the nation. He wants to know what your thoughts in terms of why the government isn't focusing mainly on securing that entire axis versus the I think he's concerned about the economic decisions and policies, the NPR and all of that, but what's happening on the governance and fiscal side. And to also tie that to the second question, somebody wants to know why the MPR has been maintained for 3 consecutive meetings, and any thoughts on how that is going to improve stuff? Yeah.
No. I think the interest rate, there's a limitation of monetary policy as a panacea or a therapy for inflation. Inflation has two sides to it. There's the output side and then the money supply side. So to look at it strictly from one angle is, you're not doing yourself any justice. I think that's very, very important to know. Also, it's also very limited to think that food inflation is because of insecurity. There are many factors that go to food inflation. First and foremost, what is the total supply of food, right? And where is the food going? Let me give you an example. We've gone from almost 1 million to almost 7 million tons of fertilizer in this country a year now. More than that. And yet, the amount of fertilizer being applied for food growing has actually reduced. Agricultural production index has reduced. Why? Because people are using fertilizer to smuggle out of the country to make explosives, right? So when we look at food and take crop, let us take maize, for example. If you have a maize farm, 10 years, 15 years ago, 20 years ago, the women come, you harvest it, you put them on top of trucks. Half of them will end up on people roasting corn, boiling corn, we do bay and all of that. Fine. 5 years later, Nestle formulates golden mold, and Nestle goes to the farm to buy 60–70% of all the maize. It's only the 30% that is left, right? Then all of a sudden, the ethanol guys come and buy maize, yam, and cassava to make ethanol because they're using ethanol to make alcohol. What is left for human consumption, which is where the price, because the guys who are going to buy, who are doing the consumer price survey, are going to Igbo market, going to mile 12 to ask what is the price of a corn, crop of corn, what's the price of a yam, one yam tuber. They are not going to ask the man who is buying the maize for ethanol. Those ones buying tons. So it's the retail price index, or whatever it is, consumer price index that you're using. Yes, there's also what we call the producer price index. So I'm saying that aggregate supply, aggregate demand has increased, but aggregate supply has not increased. The quantity supplied is increasing marginally. So it's when there's this transformational thing that makes that people now bring tractors into farms and scoop and do a lot of things. We now begin to see a massive increase in yam production, massive increase in maize production, massive increase. So you're going to have those things. I know a company, for example, who is trying to buy a sugar plantation in Basita. Why? Because that company wants to buy that sugar plantation, which has been left, abandoned, to buy to grow the sugar to make ethanol, right? But the sugar price in the market right now is not reflective of all those activities. So my theory is that there's export smuggling because people are buying maize to carry across the border to earn CFA francs to bring in the now that the exchange rate is stable, there's no incentive for me to carry maize and yam across the border. I can sell my yam in Naira here and do well. 2, I can sell my yam to Lishabi Mills or sell it to the market woman or sell it to Nestle who are making yam chips or plantain chips. They do that, right? So it is a restructuring of the markets, right? Because of equilibrium pricing of the exchange rate that is leading to some of these things. A lot of people are now investing domestically because, one, if I get my Naira, the value of my Naira compared to the dollars, compared to the goods that I buy, is in equilibrium. So you have to look at it like that. And that is why. So looking at the symptoms of economic malaise, right, is not, doesn't do you any justice. What you should be looking for is what is the fundamental cause of that economic misalignment, right? And that if that misalignment is going to be realigned, then you will find that just like the flour millers are now saying, yes, we can price our flour at 65,000 naira because the alternative, the substitute, is the price of yam or the price of garri. And so once the price of garri starts to go reduce, although people don't take garri for breakfast, because it's too heavy to consume now and become totally unproductive. Now, so the breakfast alternatives, fried yam, right? Bread, yam, what they call bean cake, akara, and all those things. Those are the breakfast substitutes. The lunch substitutes is rice, that's just swallow, right? Then you now go, like I was on channels yesterday, we talked about cooking gas has come down. There's a lot of cooking gas, but there's nothing to cook, right? Because the commodities are short, right? So those are the things that those are anomalies are what people are people are trying to deal with, right? I got a lot of calls. Oh no, the price of this, price of eggs. Yeah, the price of eggs have gone down from 6,000 to 5,500. Yes, because the price of maize has come down and the feed for the chickens. So the chickens, you have layers and broilers, and the chickens are now. So that's what I see. Okay. So please, when you're looking at food inflation, differentiate between retail prices and producer prices. Differentiate between that which is being smuggled out to bring foreign exchange in. And now that there's no demand for foreign exchange, so those guys are not smuggling, and they're putting all that food into the market, and now it's bringing down the price.
Yeah,
and you
so
have
there's
people
several
complaining.
other things involved.
Yeah.
All right. Henry Wanguma has a question, and I'm going to read it verbatim because he goes to fundamentals on a national level. And it says, according to you, power availability is a prerequisite to grow to a $1 trillion economy. Given that skilled power capacity isn't something you pick off the shelf, it's almost clear that we cannot achieve this. So are there other approaches we can apply? If there are, could you touch on them? If there are none, and we continue to grow at this current official rate, what do you envisage the size of the economy to be by 2030, vis-a-vis the goal?
No, I don't agree. Is the way he's looking at the question, or the question itself, is not an efficient question, if I may use that word. Power, 5,000 megawatts. I said to grow the economy, first of all, it's necessary but not sufficient. Even if you grow power, if power goes from 5 to 20,000 megawatts, it doesn't mean you get, but your rate of growth will increase because there's a positive correlation between the amount of power that you have generate and the growth rate. Now, how many sectors are power dependent? Agric, for example, is not that power dependent except for storage in some cases. So you don't need power to grow cassava, to grow cocoa, and all that. So, but manufacturing, trading, because trading, education, and some of these sectors, even construction. Construction is not that power dependent because you drill and so, but the artisans, the vulcanizer, the plumber, the electrician, all of these guys, and even the telcos, the devices are power intensive. So we are saying that if you solve the power problem and increase power supply, for every 1,000 megawatts of power increase, there is a point-something% growth increase, right? Since we've started this call, which was 10 o'clock, we've had, I think, 2 power cuts, right? And we come back, I can see, Now, we are supposed to, last week we were put on band A, right? But at the same time, we also have solar alternatives, we also have generator, and we have eco distribution here. I'm saying that when I look at my power costs, not power cost, and we are in the service business, right? We have no cranes and all of that. My power cost comes to something like almost 15 to 20% of my total cost. Yet I'm in services, I'm not in producing goods. If I can have a much more efficient power, I can imagine how much more I can use for my core business. I'm spending time on my diesel, spending time checking my solar, spending time. The time I'm spending on all of these things, apart from the because I also costs. So what we must agree is that there are what we call embedded power solutions. There are some areas where Gudu and some areas where they've had an embedded power. The guys are happy to pay 200 naira per kilowatt, 300 naira per kilowatt to have power all the time and have no generator, have none of this. And so we are saying that the power solution is going to come from three things. One, forbearance of the loan. All the people that bought power assets borrowed money, and many of them borrowed in dollars, paying 12% per annum on dollar loans. They are already bankrupt. Somebody has to come back and write off those things, take those shares and sell those shares of those companies to others. I think Amcon just sold Ibadan Disco for 100 billion naira. Somebody who's going to buy it and generate enough power and make it efficient. So if you have all those solutions, so that you can say, okay, in Dubai and Bodija, we have power. We have 24/7 power. We have that in the industrial estate. We have Ilupeju 24/7 power embedded solution there, right? You'll find that, and all those people don't, instead of buying gas turbines, buying this, buying that, you actually increase output, and that will translate into higher profit margins, better stock prices, like what we are talking about. So we should be looking at those solutions, and we cannot definitely survive at 5,000 megawatts. The minimum require about 25,000 megawatts just to ensure that there's power supply, efficient power supply across. And that can be done within 2 to 3 years easily, right? And so I don't put that beyond those who told us that we would never be able to produce petrol in Nigeria. We would continue to have subsidies. People bought tank farms everywhere. Today, the picture has changed. The price of petrol can never come down. What goes up never comes down in Nigeria. The price of petrol has come down. The price of diesel, which was 1,000, is now down. MTN is feeling very good. The towers are now having diesel and generators and solar solutions. Same thing's happening for Airtel, same thing happening for Globe. So again, the people who are supplying the towers are doing that, and a lot of people, right, who were betting on the fact that the naira will always be weak, right, and now begin to review that position. Thank you.
Thank you so very much, sir. Unfortunately, we can't take any more questions, even though the questions keep coming in, but we can never just cover all the questions. But I'd like to say thank you, sir. And let me invite our Managing Director, Ade Buraimo, to speak. Over to you, Ade.
Thank you so much, sir. Once again, we are very grateful for your professional support, fatherly and brotherly support. Thank you so much, sir. I just want to reiterate and thank everybody on the call that this program will now religiously be held next day after the MPC. And we want to thank our speaker for his availability. I want to solicit and appeal to everybody on the call that you can now open your account with us. There are actually basically 4 ways you can open the account. You can open with our USSDs, the *734# and the QR code, which will be shown very soon before the end of the program. Then you can go to our website, and finally you can walk into any of our 14 approved branches nationwide. On that note, I want to say thank you once again, sir, and we'll continue to be grateful to you and celebrate you always. And thank you for all the supports too. Thank you. Over to you, Doing. Thank you so much, sir.
Thank you.
All right, so I guess we've come to the end of today's session, and we look forward to see you at the next.
Though if you need the ED to do the vote of thanks. Thank you.
Oh yeah, where is George? Is George on the line?
Yes,
I
it's
don't-
there. It's there.
Yeah, George is here.
Oh, okay, George. Okay, let's have the vote of thanks, George.
Okay, thank you so much. Following that wonderful remark by our managing director, we want to write on that to say that we are grateful to everyone that have made today worthwhile. We are not taking all our esteemed audience for granted. They are always there for us. They made this stick. Look at the volume of questions that are becoming. But for time, we have exhausted them. But we want to let you know that your presence means a lot to us and continue to cherish you as you support this program. And our GMD, who just made that remark, has spoken eloquently on what the expectation should be. Religiously, we'll continue to have this program now a day after the MPC, and that is additional commitment or responsibility he has taken on himself. And I want us to appreciate him wonderfully for all this he has been doing for us, to making this program always a reality, ensuring that things are always in place in terms of what it needs to bring it on board. Our MD, we are grateful to you, and we pray that God will continue to bless you and enrich you with knowledge and everything that is required for you to excel in life. Thank you very much for all you do. Then to our speaker, his erudition is always spot on. You can be sure of all that you gain from this program. Sometimes you come in pessimistically, but you leave with good radiance of hope. And that is what he has exhibited today. Look at all the investment outlets that is made available to you. You can't get this easily. You can only get it on this webinar organized by Alpha Morgan. I want to thank you, sir, for always being there for us, for handholding us through all this maze so that we're able to come and there's always light at the end of the tunnel. To the end that we know where to put our money and where to make, you put 100 million, you go and get 200 million return on investment.
Okay.
That is not magical. It's just about knowing what to do. And it comes from the erudition of our able speaker, Bismarck Rewani. We thank you, sir, for all you do, and we'll continue to appreciate you for being our friend and for being supportive at all times whenever we call on you. Thank you, everyone, and we look forward to the next edition. MPC is in September, a day after MPC. We look forward to meeting you again. God bless you.
Thank you.
Thank you.
Have a good day, ladies and gentlemen.
Have a good
Thank
day,
you,
everyone. See you on the next one. Bye-bye.
Bye-bye.